Many investors love defensive stocks like this because they are far less likely to be pulverized in the down economy and should even continue to pay regular dividends in a recession. Hey there, Stockspert here. Today we are reviewing top 10 defensive stocks. On this channel I share my experience and thoughts on personal finance and investments, so make sure to check out also other videos and subscribe to my channel for more videos in the future. And if you like the video, invest your click into the like button and I'll do my best to return your investment by quality insights. More conservative investors who value both capital appreciation and preservation of capital might look to these stocks, which should be far less risky than the most publicly traded companies. Firms on this list are enormous, with market capitalizations over $50 billion. On top of that, they have at least 10-year streak of paying dividends without interruption, whether that be on a monthly, quarterly, semi-annual or annual basis. Companies are ranked according to how long they've been paying dividends, with the longest streak at the top. These stocks also have an average daily trading volume of more than 100,000 shares and a price per share above the $10, ensuring a minimum degree of liquidity and stability. These are the two things defensive picks should have in certain. I'll start with the stock ranked number 10 on the list, and this is Danaher Corporation. This company operates as a medical company which designs, manufactures, and markets professional, medical, industrial, and commercial products and services. The current stock price is around $205, with the most of recommendations of buy and strong buy for the last 1 year growth of 46.53% and last 5 year growth of 132% and dividend yield at 0.35% and growing each year. Number 9 on the list is Blackrock Inc. As of the end of 2017, BlackRock was the world's largest money manager. BlackRock had its initial public offering in 1999. Among its products, BlackRock offers clients retirement plans, college saving plans, and sustainable investing for the socially conscious. The current stock price is around $601, growing by 43.77% for the last 1 year and 91.17% for the last 5 years, with a dividend yield of 2.44% and growing each year. 8th in the list is Lowe's Companies. You might be watching how-to videos on tiling your kitchen backsplash, installing a new bathroom for say, or painting your living room if you are new to do-it-yourself home improvement. Or you might be a seasoned professional who is about to install a water heater or remodel a client's kitchen. Chances are you both will need something from Lowe's for your project or job. Lowe's Companies has more than 2,300 Lowe's home improvement and hardware stores in the US, Canada, and Mexico. This store sells items across a variety of product categories and departments, including lumber, tools, paint, appliances, lawn and garden, as well as kitchen, bathroom, doors and windows, hardware, and home decor. Lowe's also sells items online at lowes.com, while it started out as a small hardware store in North Carolina in 1946. The current stock price is around $165, growing by 53% for the last 1 year and 142% for the last 5 years, with a dividend yield of 1.44% and growing each year. And the next investments in the list is your likes to this video. Seems like fair to me. You invest your like and get defensive stock ideas that even give dividends. So click the like button and get to know about the next stock. Number 7 on the list is Qualcomm. You can now buy cell phones that fit in your pocket and cost less than $1,000 and come in a variety of colors and styles. Also, most of today's cell phones can be connected to the internet and can be used to look up information, as well as downloading applications and stream songs and videos. Many of these high-tech devices are powered by Qualcomm Snapdragon processors. Founded in 1985, Qualcomm designs, manufactures, and sells computer hardware, such as Bluetooth and Wi-Fi chips and cellular modems. Primarily serving in the telecommunication industry, Qualcomm sells its products to original equipment manufacturers, including Sony Corporation, Samsung, Microsoft, and LG Electronics. The company's technology is used not only in cell phones, but also in items like tablets, automobile systems, hospitals, and wearable devices such as smartwatches and fitness trackers. Qualcomm's products can be found in many other devices, like different types of cameras, printers, remote controls, and etc. The current stock price is around $118, growing by 56% for the last 1 year and 101.95% for the last 5 years, with a dividend yield of 2.24% and growing each year. 6th in the defensive stocks list is Newmont Mining Corporation, which is one of the world's largest gold producers. The company explores for and produces gold and copper in 4 continents of the world. Its operations and assets are located in the US, Australia, Suriname, Peru, and Ghana. The company was founded in 1921 and is headquartered in Greenwood Village, Colorado. The current stock price is around $66, while it showed 58% growth for the last 1 year and 277% for the last 5 years. Its dividend yield is 1.54% and growing each year. Number 5 on the list is Activision Blizzard. Activision merged with Blizzard in 2008. Together, the company can claim some of the biggest titles in e-gaming such as Call of Duty, World of Warcraft, and Overwatch. In 2016, Activision Blizzard acquired a mobile gaming company, King, which makes the Candy Crush series. Let me know in the comments if you've played this game. In 2018, Activision Blizzard reported 374 million monthly active users in 196 countries for its games. The company is headquartered in Santa Monica, California, and its current stock price is around $83. It grew by 67% for the last 1 year and was accelerated by the pandemic, while its growth for the last 5 years showed 187%, with the dividend yield of 0.49% and growing each year. Number 4 in the list is Microsoft Corporation. It's one of the largest and most popular technology companies in the world and is known for developing, manufacturing, and selling software and hardware products such as the Microsoft Windows operating system, Microsoft Office, Surface tablet and computers lineup, as well as video game console Xbox and cloud computing service Microsoft Azure. Its stock price currently is around $228. It grew by 67% for the one last year and 415% for the last 5 years. While its dividend yield is almost 1%, it's around 0.9% and showing growth year over year. And the third defensive stock is ASML Holding. ASML Holding is the world's leading supplier of lithography systems for the semiconductor industry. The company also develops complex machines critical to the production of integrated circuits or chips. ASML develops, integrates, markets, and services advanced systems used by semiconductor manufacturers to create chips that power a wide array of electronic, communication, and information technology products. The company has more than 70 locations in 16 countries. ASML's primary competitors are Nikon Corporation and Canon USA. Founded in 1984, it's headquartered in Netherlands. Its current stock price is around $379 and it grew by 74% for the last 1 year and for 309% for the last 5 years. Its dividend yield is around 0.77% and showing growth each year. Number 2 in the list is TSM, Taiwan Semiconductor Manufacturing Company, which engages in the manufacture and sale of integrated circuits and wafer semiconductor devices. Its chips are used in personal computers and peripheral products, as well as informational applications, wired and wireless communication services products, automotive and industrial equipment, digital television, game consoles, and digital cameras. The company was founded in 1987 and headquartered in Taiwan. The current stock price is around $80 and showed growth of 93% for the last 1 year and 303% for the last 5 years. And it has a high dividend yield at 2.08% and showing growth year over year. And the number one defensive stock is Visa. Visa, positioned as a global payments technology company that facilitates the use of digital currency. As expressed in its own advertising tagline, Visa seeks to be everywhere you want to be. Visa is used in more than 200 countries and 160 currencies. Company doesn't issue card itself. Instead, it is the payments network that enables transactions to occur via credit cards. Visa's network includes more than 16,000 financial institutions and 44 million merchant locations. The company had its IPO in just 2008, and today its stock price is around $215, which grew by 18% for the last 1 year and by 191% for the last 5 years. The dividend yield is today at 0.57% and shows growth each year. While you're looking for defensive stocks, US tech stocks have been pushing the stock market to record highs, and now the sector become more valuable than the entire European stock market. And this is for the first time in history, according to the latest research from Bank of America. If you are up for the tech stocks, here are 7 top tech stocks that Bank of America recommends. Check out them, and there are 5 more stocks that are waiting for you, which may be the next FAANG stocks. Don't forget to invest your likes to this video and subscribe to my channel and hit the notification bell to not miss the upcoming videos. Thanks for watching and see you in the next video.